Two people walk into the same bank on the same morning. One waits 47 minutes. The other waits 47 seconds. Same building, same institution, same doors. The difference isn't who they are. It's what's sitting next to their name in a database they'll never see. This is what that number actually does to you. Level 1 below 0. The notification comes at 6 a.m. Not an alarm, not a message from someone who cares about you. An automated flag. Your account is negative. Not by much. $11. A streaming service you meant to cancel 2 months ago finally caught up with you. The bank charged you $35 for it. You stare at the number, negative 46. You do the math 3 times, like the answer might change. It doesn't. You call the number on the back of your card. You wait 19 minutes. A voice reads a script at you. Fees cannot be waived at this time. You ask to speak with someone who has the authority to help. They say someone will follow up within 2 business days. No one follows up. By Thursday, 2 more payments have processed against a balance that was already gone. 2 more fees. The original $11 has turned into a $112 hole you didn't dig on purpose, but now have to climb out of alone. You go to the branch. The teller looks at her screen, and something behind her eyes shifts. Not cruelty, not sympathy, something colder than both. She processes your account in 30 seconds and wishes you a good day before you've finished your sentence. You walk out with nothing resolved and the specific feeling of having been managed rather than helped. The first rule: at this level, you are not a customer. You are a liability wearing a human face. Level 2, $500. You clawed back, picked up extra shifts, transferred the exact amount to stop the bleeding. $500. Positive. You check it 3 times to make sure. The bank doesn't celebrate with you. The maintenance fee comes out on the 14th, $12. The minimum to avoid it is $1,500. You're not there yet, so the system just takes it. You apply for a credit card. They offer you a secured option. You have to deposit $250 of your own money so they can lend it back to you at 23% interest. You reread that offer twice to make sure you understood it correctly. You did. You walk into the branch and stand in line for 22 minutes. The teller helps you without making eye contact. No small talk. Efficient. Clean. You exist in their workflow the way a number exists in a spreadsheet. Processed. Filed. Moved past. The second rule: at $500, the bank sees you as someone to maintain, not someone to retain. Level 3, $5,000. The maintenance fee disappears without warning. You log in one morning and it's just gone. No notification, no explanation. The system detected your consistent direct deposit and decided you'd crossed a threshold. The threshold was never explained to you. You just had to find it by accident. Credit card offers start arriving. Real ones. Limits with 4 figures and your name in raised lettering. The institution that declined you 8 months ago is now sending you envelopes with the word pre-approved printed in silver ink. You walk into the branch, and the teller says good morning before you reach the counter. Not warm, not cold. Somewhere in the middle. The professional courtesy extended to someone the system has decided is worth a little friction. You get a small personal loan approved in 48 hours. The rate isn't remarkable, but it works. The system worked the way it always promised it would. You just had to earn the right to use it. The third rule: at $5,000, you stop being invisible. You become sellable. Level 4, $25,000. A person calls you. Not automated, not a survey. A person with a name and a direct extension and a title that includes the word relationship. He wants to schedule time to talk about your goals, your timeline, your future. The institution that put you on hold for 19 minutes at $0 just called you first thing on a Wednesday morning. Your next loan comes back at a rate a full 4 points lower than before. A fee appears on your statement. You send one email. 3 hours later, it's reversed. No form, no escalation. Just taken care of. The same fee that drained your account for years is now optional. Nothing changed about the fee, only your tier changed. The fourth rule, at $25,000, money stops costing you as much. The price of being trusted goes down. Level 5, $250,000. You are a preferred client now. The word appears on your statement, on the welcome screen, on the email signature of the man who manages your account. You didn't earn the title. The number did. You walk into any branch in any city and they know your name before you sign anything. Not because you're famous, because the system has flagged your profile across every location. Someone walks you past the line. The same line you waited in at $500. The line you stopped noticing the moment you stopped standing in it. A mortgage pre-approval arrives before you've looked at a single property. The bank decided what you qualify for before you decided to buy. They want the relationship before you need it. The fifth rule, at $250,000, the bank stops waiting for you to ask. It starts anticipating. Level 6, $5 million. No one sells you anything anymore. They consult you. The difference is everything. A product is something the bank wants you to buy once. A consultation is something they want you to need forever. Your private banker manages fewer than 15 accounts. Yours is one of them. He knows the name of your dog. He knows about the investment property you mentioned once over coffee in March. He remembered because he was trained to. The bank teaches its people to remember the small things, because small things are what keep large accounts from leaving. You attend a private dinner, 8 people, a city view. No one mentions money the entire evening. Money is the table, not the conversation. The sixth rule, at $5 million, you are no longer a customer. You are an asset. The bank is quietly afraid of losing. Level 7, $25 million. The rules don't apply at this level. They get rewritten for you. Interest rates are not pulled from a system. They are negotiated in a phone call. Investment minimums are waived because the relationship justifies it. Deals are structured around your participation before you've agreed. The chief investment officer asks for your opinion. The head of private banking flies to your city to ask what their next tier of clients should expect. You are being consulted by the same institution that once charged you $35 for an $11 mistake.